Hello, welcome again to our channel today. I am Oya Benjamin and this is Xander FST. We provide you with videos that help you maximize profit and minimize losses. If you are new to our channel today, you are welcome. And for those that are already subscribed, we want to say thank you for your trust and your support. In this video, I will be showing you the accurate when and where of every entry using the smart money concept. Don't go anywhere. Now, before we continue, I would like us to take a quick recap of what a liquidity pool is all about. For proper understanding, feel free to watch one of my videos displayed above where I took time to analyze everything that you need to know about the liquidity pool. Okay, now let's continue. A liquidity pool is that price level where a lot of traders are willing to initiate a trade, either a buy or a sell trade. Okay, when coming to liquidity pool, I want you to understand, number one, that the liquidity pool is always found on the correctional wave. That is the first thing I want you to understand. Now, the second thing I want you to understand is that liquidity pool is made up of two types. Okay, now we have the sell side liquidity and we have the buy side liquidity. Now, the sell side liquidity, now this is where a lot of traders are willing to initiate a sell order. Okay, now you talk about the buy side liquidity. This involves where a lot of traders are willing to initiate a buy order. Now, where do I enter my trade on a trending market? The first thing I should look out is to observe that point where a break of structure occurred. Now, what is a break of structure? A break of structure occurs when a previous liquidity pool is swept off by the impulsive wave. Okay, now if you look at this point now, you discover that at this particular point here, okay, at this particular point, this last liquidity was swept by this impulsive move. Okay, now so here becomes our break of structure. Okay, once you have gotten the occurrence of the break of structure, the next thing you will be looking at is your entry point. Okay, now if the market is trending and a break of structure has occurred, now the last liquidity pool before that break of structure becomes your entry point. Now you can place your entry exactly at the point of the liquidity pool. Number one. Number two, I should target an order block that is found within this liquidity pool. Now once I spot any order block, it becomes my entry point. Number three, I should look at a fair value gap. Once I can be able to spot a fair value gap on this liquidity pool that was broken, it becomes my entry point. So these are three ways to place my trade. Now note, if it is in an uptrend, then your target should be on the sell side liquidity for either your order block or your fair value gap. Now, but if it is a bearish move, your target should be the buy side liquidity pool for either your order block or your fair value gap. Now let's proceed. Let's look at the chart and see how those things plays out in the charts. Now, if you look at this chart here, you will discover that you can see I have marked out my liquidity pools. Now this is my sell side liquidity, my buy side liquidity, sell side liquidity, my buy side liquidity. Now looking at this market now, you see that this market is in an uptrend. Now, so what do? I should target the sell side. This is the sell side liquidity and this is the buy side liquidity. So I should target the sell side liquidity as my entry point. Okay, now on this, now this is my sell side liquidity. Now I can either take the level, this level direct here and enter my trade, or I look out for this order block that occurred here and use this order block to enter my trade, or I look out for a fair value. But for me, I prefer either using the order block or targeting it using the level of my sell side liquidity. Now look at it here again. If I'm targeting my sell side liquidity, this is the level of my sell side liquidity. I move. I place my trade on this level. Now you notice that this market came down, triggered my trade and moved up. So when you are having a bullish trend, always target your sell side liquidity pool, which is on the correctional wave, for your entry. Now let's look at the bearish trend and see how it occurs on the bearish trend. Now you look at the bearish trend, the same thing occurs. Remember, your liquidity pool is always on your correctional wave. Okay, now I target my liquidity pool. Now this become my buy side liquidity and this become my sell side liquidity. Okay, the second thing I should be looking out for is a break of structure. Now you look at this thing at this point here. Okay, this liquidity pool was swept. Now once I spot a break of structure, this last liquidity on the buy side becomes my entry point. Now I take the level of this liquidity and place my sell order. Now you can see the market triggered it here and moved. So because you are dealing with a bearish movement, now your target at this point becomes the buy side liquidity pool for your entry. It's either you take the level of the buy side liquidity, or you look out for another block, or you look out for a fair value. Now let's go to the chart as we see how those things apply to the chart. Looking at the chart here, you discover that this chart is making a lower highs, and is making lower lows, lower low, lower low. So automatically this is a bearish trend. Okay, now this is my buy side liquidity and this is my sell side liquidity. Now you look at it, there's a break of structure at this point. So this was the last liquidity pool that was broken. So my entry point here, because this is a bearish movement, my entry point here becomes the buy side liquidity. Okay, I can place my entry here exactly, or I look out for another block or a fair value gap here. Now look at it here, you can see that this market was triggered here and went down all the way here as my profit. Now as long as that trend continues to be in a downtrend, the buy side liquidity becomes your target point for your entry. Now but once there is a change in the pattern from the down movement now to the up movement, now in the up movement the sell side liquidity becomes your entry point. Now let's look at where to enter my trade when the market is ranging. How do I know that the market is ranging? When the highs of the market are respecting a particular resistance level and the lows of that market also are respecting a particular support level, that market is in a ranging trend. So where do I put my entry on a ranging market? Now I want you to understand that when you are trading a ranging market, you make use of limit orders. Avoid instant orders when trading a ranging market. So make use of limit orders. Okay, now I've noticed that once it gets to this level, it will come down. Once it gets to this level, it will come down. What do? I will come to this resistance level. Now below the resistance level, I will put my sell limit. Okay, below the resistance level. Then a little bit above the support level, I will put my buy limit. Okay, now knowing fully well that once it hits this particular support level, it will start going up, and once it hits this particular resistance level, it will start coming down. So in a ranging market, I target the resistance and the support. Now but when trading this ranging market, you be careful because this is a 50-50. At this point here, there is a tendency that a breakout can occur here and you'll be taken out of the market. So your risk management, you have to apply your risk management when trading a ranging market. Now let's go to the next one. I want you to pay keen attention to this particular one that we're about to discuss now, because this is very, very important. And we are going to be looking at where to put my trade when there is a market shift. Now let's look at the market change in structure. Now market change in structure simply means when there is a change in a particular pattern that the market has been running with. Okay, now once there is a change in a pattern, automatically the entry and everything changes in line with it. Now you look at this market here. This market has been in a downtrend. Okay, now all of a sudden from here it changed from the downward movement to the upward movement, because the high of this market broke this previous high, okay, giving us a change in structure. I want you to know that whenever a change of structure occurs, it forms two patterns. It's either it gives you a double bottom or a double top, or it gives you a head and shoulder or inverse head and shoulder. Now if you look at this particular change of structure, you will discover that this change of structure gave us what? The inverse head and shoulder. Now in dealing with this particular change of structure, our entry point is different from that of the change of structure that gives us a double bottom. Now when I come into the market and I observe a change of structure giving me inverse head and shoulder, where should my entry be? Always look at the last correctional wave that formed before the change of structure. Now this happened to be my last correctional wave, okay, before the change of structure. Now if it is a bullish change of structure, now your entry is at the buy side. Look up. Now it has been coming down, 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 and all of a sudden there is a change of structure. You are anticipating that the market will start moving up. Now because you are anticipating that the market, after changing the structure from the bearish movement, should start going up, now your entry will be at the buy side liquidity. Now, but if it is a bearish change of structure, the market has been moving up, and all of a sudden there is a change of structure and you are expecting a bearish reversal in the market. Now your entry point should be on the sell side liquidity. Now let's go to the chart as we look at it. Now if you look at this chart, you will discover that this market has been on a downtrend, and all of a sudden there was, look at it, this was the last low that was formed. Look at it. At this point, the low was broken by this wick. Where will my entry be? I will locate, number one, the last correctional wave before the break of structure. And once I locate the last correctional wave, now where should my entry be? My entry will be the buy side liquidity. This is the buy side liquidity. Why? Because I'm anticipating a bullish reversal. So therefore, I should wait for my entry at the buy side liquidity. Now you look at this. This is a bearish change of pattern. Now, and this bearish change of pattern gives us the head and shoulder pattern. This is the two shoulder, shoulder number one and shoulder number two. Okay, now let's move. Look at it here. This was the last correctional wave that was made, and this is my sell side liquidity and my buy side liquidity. Okay, now look at it here. At this point here, this was where the change of character occurred. Now the market has been in a up movement, so I'm anticipating the market after the change of character to start coming down. So where should my entry point be? My entry point will now be on the sell side liquidity. Now let's go to the chart as we see it play out. Now look at it here. Discover that this market has been in an uptrend. This was my last correctional wave. At this level here, there was a change of character. The pattern changed. Now that I'm anticipating a downward movement, where should be my entry? At the sell side liquidity. Remember, this is my sell side liquidity. So this sell side liquidity becomes my entry. The market came down, okay, tested the sell side liquidity, triggered my entry and moved down. So when I have a bearish change of structure and the pattern formed is a head and shoulder, my entry should be targeted at the sell side liquidity. Now, but if I have a change of pattern, a bullish change of pattern, giving me inverse head and shoulder. Because I'm anticipating the market should go up, I should target my buy side liquidity. Is that okay? Now let's look at the change of structure that gives us the double bottom or the double top. So if you look at this trend here, you notice that it has been in an uptrend. Now this was the last low and this was the last correctional wave, okay, that was made. Now all of a sudden what happened? The market was broken. A change of character occurred here. Whenever a change of structure gives you a double top, please locate the neckline of that double top. The neckline becomes your entry. Now once the pattern has been broken, or once there is a change of character, the market will come back again to test the neckline before moving away. Now let's look at it in the chart and see how it plays out. Now you go to the chart and this becomes the liquidity. So this becomes my sell side liquidity and this becomes my buy side liquidity. Okay, now you look at it here. Yes, this was the last low here. Now it was broken. Look at it here. There's a change of character occurred here. So what do I do here? Now I trace the neckline. Okay, the neckline which is at this spot. I place my entry. You can see it came down to retest the neckline then before moving down. Now let's look at the next one, the change of market structure giving us the double bottom pattern. Now I look at it here. This market has been on a downtrend and all of a sudden, okay, now there was a change of character here. There was a change of character at this point. Now this was the last high of the market. Now you can see that this high was lower than this. Now there was a change in character here. You can see that this particular high now became higher than this high. Okay, now what do? I locate the neckline. Now this neckline becomes my entry. The market will come down to this neckline, retest it and move up. Let's look at the chart as we see how this one plays out. Now you look at it here. This market has been in a downtrend. Okay, now this was the last low. Now you look at it. This low was broken here at this point here. This is where the change of character occur. This particular point here becomes my neckline. The market went up, came down, retested the neckline before moving out. Whenever you enter the market and you spot a change of character or market shift, okay, I want you to observe the pattern that the market shift is forming. Okay, if the market shift forms either the head or shoulder or the inverse head and shoulder, then you should be able to know the right position and the right liquidity pool to target for your entry. But if the market change of structure forms the double top or the double bottom, the neckline should be your entry point. I believe that you have learned something from this video. In my next video, I will be showing you how to develop a profitable trading strategy. But before you go, don't forget to hit the subscription button, like and share this video so that it will benefit others. And above all, turn on the notification bell so that you'll be notified when I post the next video. Have a successful trading week ahead. Bye.